Bloomberg Audio Studios.
Podcasts, radio, news.
Okay, I got to tell a story here. He's going to love this. So I'm at Michael's, this is 15, 17 years ago. And then, they're giving me an overpriced salad and my third drink. And it's the art directors for my book. And they're like, Tom, we have to have an inside sleeve, one of your charts, 114 charts. Which chart would be like when you open the book, you see it, inside the book cover and that. And I made the decision, over the olive on the martini, I said, it's got to be Malpass.
Yep.
Malpass is at Bear Stearns, and out of all the people in the book, and these are heavyweight, Bill Dudley, the former Fed president, Bob, the New York Fed president, Malpass had the most amazing chart, which was yen and gold, like what Dennis Gartman did. Joining us now, the former head of the World Bank and iconic at Bear Stearns, Mr. David Malpass as well. I just looked at yen and you, and credit to Dennis Gartman as well. It's the call of the decade. Weak yen that we saw, whether it's yen and gold or yen and whatever. How does Japan turn around this train wreck?
Hi, Tom. You can stabilize your currency by having a good growth plan. So Japan's got to articulate that. They're not badly positioned in the world since people are trying to diversify away from China, and Japan has a lot of the things that people want. And so if they can retool the economy, it can work.
It's an experiment of reflation, which is pretty, you're at Colorado College, and it's it's not even in the textbooks. Okay, it's an experiment in reflation, and they want to pull that back. Can they find a middle ground that works versus tripping into deflation again?
They can, but they need to really think about their interest rates. They're pushing up against the 1% limit on the 10-year bond. It really doesn't work to say you're going to limit your bond yield, but you want your currency to stop weakening. So right now they're intervening to try to tide that over. That can work for a little while, but at some point you have to say your interest rates are going to be more similar to the rest of the world interest rates.
Paul wants to jump in here. One more question on yen. What is your call on Japanese yen? I know you're not doing FX and market economist, but do you see a big figure strengthening in Japanese yen or more of the same?
I think it could settle where it is now, and the world would accept that. And that is a little bit what is going on. The world moves through currency realignments and then tries to stabilize after that and reduce the harm from that.
Paul, he's tanned and rested. Did you notice this? He's left the World Bank and he's tanned and rested.
I know. I'm very impressed. David, we've seen, bringing it back to the U.S. here, my entire career we've been talking about annual deficits and the national debt. And now we even have Jamie Dimon, David Solomon at Goldman Sachs talking about the national debt. We've even got that silly thing downtown where they tally up the national debt on a daily basis for everybody to see. Is it time to care about that stuff? I'm 60. Do I care?
I think absolutely it is time to care. It was one thing when the U.S. economy had a 50% debt to GDP ratio. You could borrow that and not really tax the world's capital or take all of the world's capital. We're the biggest economy, and we're borrowing so much that it changes capital flows around the world. And I think it's doing it in a harmful way. It's the government gets the first dibs on all capital, and then if there's any left over, big corporations get it through the bond market. And if there's any left over, which there isn't really, small businesses can borrow to fund their inventory, their working capital, and countries outside the U.S. have a little bit of capital at the end of the line. That's not a workable system for the world. So I think there has to be, both in the U.S. and in the world, an urgency that the U.S. government stop growing its spending.
And this is, I guess, a political issue. And again, in my lifetime, I've never seen the political will to address it because it doesn't sound very popular.
That's right. And I think there's a big gap in our law. The debt limit law is misnamed. It's really the debt increase law. So every couple of years, presidents, both parties, sign a law to increase the debt limit. We have to replace it with something workable, strong, and it has to hurt Washington, not hurt the people of the country when we have too much debt.
David,
they shut the national parks rather than reduce reducing the staff hiring in D.C. The swamp gets bigger every time.
Listen to you.
Every
You leave the
time.
World Bank and
Yeah.
it's a swamp now.
It's a
You
swamp.
worked in the swamp for 3 years.
That-
What'd
I
you
did.
learn working in the swamp?
So Washington is a swamp. All the parts work together to make Washington bigger and more profitable. That's a risk, and the World Bank is part of that. It's headquartered and centered in Washington. One thing I learned, Tom, was how hard it is to get any other country to do the right thing. It's just as hard outside the U.S. as in the U.S. So if you take Nigeria, why is this oil-rich country so poor? They've got a huge extreme poverty rate. Why is that? Because the government takes all the profits from oil and wastes it.
This is such a better Malpass than the World Bank, where you had 8 people standing around looking at every word. We're with David Malpass, is public service to the nation and the world with the World Bank, and involved in politics as well.